I'm Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network. Big episode today. We're doing what has become sort of a quarterly, near quarterly tradition of having several Cabot analysts on to do sort of around the horn check-in to sort of take the market's temperature, the temperature of different sectors and investing styles. So Brad will give the rundown in a minute of who we're going to have on. But first, it's Super Bowl weekend. What's your level of interest, Brad? Chiefs, Eagles. Do you care?
I
I think
I
this
like
is
to,
this might be an all-time low for caring for me.
yeah, I'm
That's a bitter Bills fan speaking, but
getting the Brady Patriots era vibes out of this one, where it's just I've got Patrick Mahomes and the Chiefs fatigue.
yeah,
Here's my angle on it insofar as I have one. Chiefs win by a little, Eagles win by a lot. So if you think the Chiefs are going to win 17 consecutive one-score games, they've won. If you think the Eagles win, Eagles blow them out. So if you're doing the sports bet thing, adjusted line on the Eagles, move them up to like -6.5. I bet they win by a touchdown. That's if you like the Eagles.
I
That's
agree.
my angle.
I can't. I've seen too much. I can't bet against Patrick
Oh
Mahomes.
yeah, no.
But I agree they'll win. I mean, they've won all their Super Bowls small, like by one score, right?
Yeah,
We
they're
have
going to
them
win on a
out
last second field goal or so. They're going to win by
right,
two on a last second field goal. It's going to,
55-yard field goal.
we've seen this one before.
Yeah,
Uh, so setting aside the football talk, this week we are going to have Jacob Mintz join us, Cabot Options Trader Pro, Cabot Profit Booster. He's going to talk about options. We're going to have Mike Santolo of Cabot Growth Investor and Top 10 Trader come in. We're going to talk to Tyler London of Small Cap Confidential and Early Opportunities. And then we're going to wrap the episode with a conversation with Cliff Droke of Cabot Turnaround Ladder. And we're going to talk turnarounds and we're going to talk precious metals.
and we're going to ask them all their Super Bowl take too. Just see what kind of variety and interest levels we get.
So, what's your betting angle on the Super Bowl before we go?
My betting angle.
Yeah, if you had to bet the Super Bowl,
Chiefs.
what's your bet?
I think they're
Just
favored by
Chiefs.
1.5. They'll win by at least three, probably three.
All right.
So I can't bet against Patrick Mahomes. It's like he's entered the betting against Brady, betting against Michael Jordan
Yeah.
era, which is just it's not a smart bet. It's okay. Keep betting on him until you're wrong. I think that's the way,
Yeah.
you know. But yeah, it's Patrick Mahomes world we're just living in it. Okay, let's get to our guests in just a second. All right, we welcome on Jacob Mintz, Cabot's options guru and chief analyst of Cabot Options Trader, Cabot Options Trader Pro, Cabot Profit Booster. Jacob, you wrote recently this week, I think you've been impressed with the market's resilience of late in the face of the DeepSeek news, in the face of tariff scares and talk and actuals with China. Um, what is there something that in particular that stands out about? I guess does this make you more encouraged this last couple of weeks, more encouraged about sort of the resilience of the bull market than maybe you were in December, early January?
Yeah, absolutely. I mean, January is always a kind of a tricky month. There's just so much rotation, and there's so many traders coming into this year who are thinking, okay, we'll rally, we'll do the Santa Claus rally, but then January, and then the new president will come in, and then we'll sell off. Well, we haven't we had some shakeouts that were not related to what everyone was expecting sell-offs for known reasons, but then DeepSeek hit, and the market tanked, but then it came back. And money rotated when DeepSeek hit. The semiconductors got nailed, but then the software stocks perked up. Tariffs came out the next Monday. The market tanked, and then now we're right back to where we were when we started. So I'm definitely encouraged by this market. There's definitely buyers on nearly every dip so far, at least. So I am encouraged. January could have been scary, but the buyers have definitely stepped up.
It's interesting that you bring up buyers. I was just reading that I think it was Goldman in a publication to their investors said that in that retail buying has really been stepping up in the face of like DeepSeek, especially where retail money is flooding back into names like Nvidia, which I last I saw I think it was about $130 a share. So it's picked up a lot off that DeepSeek news. Are you still seeing like institutional level options buying, so like the big call buys in the former leaders, or has that settled down a little bit in
So,
January?
so that's a good question, Brad. So the DeepSeek news hit, and then the semiconductors got whacked, but instantly there was big call buyers in Avago, I'm sorry, Broadcom, symbol AVGO, Marvel, symbol MRVL. So there were big call buyers, and my options radar, which is basically saying hedge fund activity in the options world, it was as bullish as it's been in a while into that decline. So now it's cooled off a little bit since then, but it's been more like my barometer is a 1 to 10, with 10 being the most bullish. It got to a 7, which is pretty bullish, and now it's pulled back to like a 5 after the little bit market rally. So yeah, there is definitely buyers in options into the dip. Today, semiconductors are a little bit weak again, but there's been a big buyer of Taiwan semiconductor calls. So it seems like every time there's a dip, the options traders, the big institutions and hedge funds start buying calls in those stocks that are pulling back marginally.
Is there a sector now that's getting some attention that, maybe you haven't mentioned that maybe not surprises you, but wasn't getting enough or much attention prior to the last few weeks?
To be honest, Chris, I mean, I wrote about this the other day, and it feels like it's a bit of a rolling bull market. We just keep finding new sectors for the bulls to step into. I have a list of earnings winners from this week, and it's all over the place. So Palantir, which is an AI defense type play. And then it's Hilton, some HLT, Hilton Worldwide, the the hotel chain. Then it's Philip Morris, the cigarettes, and I don't even know what they do anymore, to be honest. They've broken up so many times. Then it's Affirm, which is a buy now, pay later. Then it's Expedia, which is a travel. Net, which is, Pinterest, Take Two, which is gaming. It's just kind of all over the place. So that's really encouraging to somebody like me. It hasn't been Google, which fell on earnings. It hasn't been Microsoft, which fell on earnings. Tesla's given back a lot of its earnings gains. This is kind of like my dream scenario of sorts, is for the Mag 7 to kind of chill out and for the buying to really spread out to a lot of different sectors. So I'm definitely encouraged. That's why I wrote earlier this week for a Cabot Wealth Daily that it feels like we're in the start of a rolling bull market.
This is what we've been waiting for, right? I mean,
Yeah.
for most of the first 2 years of this bull market, it was carried by Mag 7, AI, a handful of stocks. And now the indexes, the headline indexes aren't moving up the way they may have at certain points over the last couple of years, but there's a lot more stocks getting, some nice attention, it seems.
I'm
Yeah, it's
glad you
it's
brought.
actually an actual stock pickers market. I mean, it's kind of fun to, you get to kind of show your skills rather than just be a trading monkey who just buys Nvidia and just buys Microsoft and Tesla. It's kind of exciting to the traders and us who, looking for stock strength in stocks that really are kind of under the radar.
Yeah, so I'm glad Chris brought up the headline indices. So even intraday, where it seems like we see a lot of selling in the morning and then big money allocating towards whatever position they want at the end of the day. It's done enough to sort of bring the headline indexes back up to or very near all-time highs. Are you thinking that maybe like the S&P and the Nasdaq are sort of capped out for a little bit as we see a lot of rotation into maybe some underperformers while, taking profit in your Nvidias, selling your big performers and pulling down the headline indices? Or do you think that we're going to start setting new all-time highs again soon?
I don't know. I'd like to see like the IWM, the Russell, kind of get back towards its highs. I guess I'm not super focused on the indexes. Kind of my dream scenario, just selfishly as a trader, is when the markets are chopping around and my stocks are going higher. So I know it obviously if the indexes are going higher, it probably means most of my stocks are going higher also. I don't really have a great feel for, it's tough to say like the Nasdaq. It's so overweight to, that Nvidia and Apple. If Apple's down $9 on a day, like it was a couple days ago, it's like the Qs just cannot get going. Same with Nvidia. So, I'm not necessarily super focused on the indexes day to day. I'm more kind of looking for the leading stocks, the new leading stocks, to see how they're performing.
You mentioned you bumped your market monitor down to a 5, I think you said, but it's been as high as a 7 recently. What would I guess, convince you to bump it back up?
It's really just about option activity every day. It's a floating number. It vacillates day to day. So if there was big call buying, the market's down a little bit today. If there was big call buying into the market decline, then I get kind of excited. Like I said, it's been trading. It's been pretty flat recently. So I will say there is definitely not big put buying that would scare me, have me running to the hills just yet. It's more just been steady calls, some calls here, some puts there. It's been kind of mixed as of late.
Uh, Brad, do you have any last question for Jacob?
Nothing springs to mind. Let
Eagles,
me
Chiefs, or
ruminate on
don't
that.
care?
Uh, Shoot, I don't know. Chiefs. I like to see Patrick Mahomes just continue to be great, and yeah,
Please, because he's obsessed with Taylor Swift.
yeah, right. Yes, my daughter
That's
who's a
true.
Taylor Swift fan, would like the Chiefs to win. So, and
Yeah,
for Taylor Swift to get engaged at the end of the game. So that's
Jacob's rooting for Taylor Swift's boyfriend's teammate. Yes.
exactly.
Yeah, my daughter's just not quite old enough where she's made that connection really between T Swift and T Kelsey.
Right,
But at least
right.
not enough to root for the Chiefs. But thanks for joining us. And yeah, sounds like a good time to be a stock picker and maybe an options trader.
Yeah. Oh, it's a great time. Thanks, guys.
Thanks. We welcome on Mike Santolo, Cabot's chief investment strategist, chief analyst of Cabot Growth Investor, Cabot Top 10 Trader. Mike, a few weeks ago, probably mid-January-ish, I know you were a little, um, hesitant about where the market might be going in the short term. You went to, I can't remember what percentage cash in Cabot Growth Investor, but highest percent it's been in cash in a little while.
Mhm.
I think that's changed in the last few weeks. I'm guessing you're a little more encouraged the action the last few weeks, and I guess I would ask how much more encouraged are you by the last few weeks?
Well, I'm encouraged. I wouldn't say I'm bullish, but put a little bit of money to work. It's hard not to be encouraged. The market's held in like everybody, right? It's held in on the deep seek. It's held in on the tariffs.
Right.
I think as we're recording this, Trump is saying some more tariffs maybe this weekend. So like there's a lot of uncertainty and all that, but the market's hanging in there. I mean, the way I look at it is if the market wanted to drop 5%, and maybe it does, but I'm just saying if it wanted to, it certainly could have by now, and it hasn't. So I do find that encouraging. Just not seeing, there's at the end of the day, everything is still near its highs, but still kind of trending sideways for 7 to 10 weeks. I will say that the longer we go looking at this last, I don't know, 2 months or whatever at this point, it's been pretty run of the mill, which I think is good. I wasn't so sure about that after the huge, last year was a huge year for a lot of growth stocks. We had a lot of speculation and good news November, December. So not that I was expecting a huge decline, but I thought the door was open to a quote unquote real correction. But the fact that we haven't had one, I think is, like I said, it's encouraging. Now we just want to see, I think there's a lot of buying at support. I'm not sure I'm seeing Fidelity's and T. Rowe Price push the envelope when the stocks and the market kind of get up. They have a good week or two. They kind of pull in a little bit. When the things dive, they support them, but they're not really pushing them to new highs yet.
Right.
Yeah, Jacob had used the term rolling bull market for this, just where we're seeing that sector rotation and people getting out of stuff that's overheated and into stuff that maybe the market had been ignoring. What is it going to take? I guess, I mean, I'll put this in simply, but what is it going to take to get you bullish again? Uh,
Right. Well, no,
I don't mean bullish in general, but I mean like throwing money out and
Yeah.
without being so diligent about picking spots
Yeah.
insofar as that ever is the case.
I mean, I'd love to see like a huge change in character that's like the market just choom, on whatever. Doesn't even have to be on news. Just my guess is it's going to be a little bit less obvious than that because it's not like everything is down 10% and people are super negative and then you get a turn. But I mean, honestly, most of my stuff is just starting to, when I say my stuff, we own or watch, it's just starting to report earnings. So I just think, and so far earnings season's been pretty good. It's not great, but it's good. I think it's definitely more good than bad. So I guess I'd like to see some more things like that. We're seeing actually a couple names today pop out of there. So which I got to go research a little bit more this afternoon, but so I start to see more of those, and I think there'll just be more stocks that say, okay, I can buy this, and even if the market has a hiccup, I feel like this thing can do well. It will be supported, as opposed to some of these things that are just kind of flopping up and down. So I would say individual stocks on earnings mostly. And then of course the index is hitting new highs. It's the best thing they can do.
Is there a sector or two that stand out right now to you, or is it more case
It's
by case basis?
I know Jacob, he's been telling me this rotation. I think that's just his way of saying like financials look good and stuff like, some of these other groups. I see it, I still think it's mixed. I mean, like within the same group, you'll have like, Chipotle and Wingstop. They're not falling through the floor, but they're just kind of struggling and lagging. And then you have like, Cheesecake Factory and Brinkers look like great, or whatever. So it's just
Of
even within the
course.
same group, it's sort of mixed. But to answer your question, I do think so. I don't think the odds favor this per se, but say we have had a decent bounce back in the AI infrastructure names. If they kind of kept going from here, I would say that would be highly unusual and bullish. So I would say I would just kind of keep that on the side as an idea. But beyond that, we have seen more buying in software, cybersecurity. I'm still waiting for more medical. Medical is just, there's a little bit here, a little bit there, but not much. But I would say software and cybersecurity. I would say if we got going from here, there's many more leading candidates there that I'm seeing. If we, if the institutions pile in.
I wanted to ask about one individual name that has been blowing up lately.
Mm.
And I think, I don't know if you've had the position or have written about it. Palantir is when
Yep.
you mentioned AI and software stocks, and something that Chris and I had talked about as that DeepSeek news was breaking is that there's going to be, presumably there will be less demand for like the huge giant data centers, but that would also presumably translate to more opportunity for smaller software stocks for the companies that are coming out and that are building the models that are going to leverage some of these improved learning
Right.
techniques that the new models are using. Valuation through the roof on it though. Any thoughts on Palantir?
Well, we've had a position for a while, so it's been a nice winner for us. So two things. So fundamentally, it's great, and the thesis of why we got in is it has its shot, and this will be a nice headline, but like it does have that feel of sort of being the Microsoft of the AI age, meaning like Microsoft had sort of the operating system and obviously other products that, a tons of businesses and people, but businesses and agencies used. And it's sort of like that, except so if someone's going to have some sort of AI platform for their own business that mines their own data and they can get insights out of it, Palantir is kind of positioned to be that firm. So I do love the fundamental story. It's had a big run. You know what I mean? I do think it's in favor here. It probably goes higher, but you're not in the first inning of the move. The first inning was, I think, in August by the way I look at things. But yeah, I like it. I think to their broader point, the day after the DeepSeek crash, basically in those stocks, you saw actually some big volume buying in a lot of these software companies. And so I think it's kind of like the usage, like Palantir actually used to say the models will become commoditized because everyone's going
Yeah.
to be doing all this, but then it's kind of like how do you use them and integrate them and do it securely and yada yada. Only certain people at the company can get certain, all that sort of thing. And so whether it's Palantir or some of these other software companies that are going to be using the AI and integrating into their systems, they started to see some buying. And that, I'm just going off the charts and the numbers and the story, but I do think that's probably going to be a tailwind going forward, is my guess. We could be transitioning finally from sort of chips networking and broadening out to the users of, just like we did with the internet, the users of the system as opposed
Yeah.
to makers of it,
Yeah, specifically, I was thinking about they're trading at like 96 times sales right now. So
Yeah.
some of the valuations are
Yeah.
getting way up there. And I guess I was curious if you're seeing maybe hype overriding some of the fundamentals of them at all.
Well, sure. But that's not a yes. But that's not unusual. I mean, that's
Yeah.
part of what happens. So like the question to me is like, is it near a top or whatever? And it
Yeah.
could be, but I haven't seen any abnormal action on that front. But sure, the valuation is big. But some of the numbers they had, I mean, honestly, their free cash flow margin was like 60, I forget, 65% in Q4, which I've never heard of that, but it was just huge. So, we'll see how it plays out. It's expensive. It's not, you know, anyone who says it can't go down from here or 25% is, that's not how the market works. But I would just say that it had the chance, like we were talking about earlier, to really get hit, and it took a hit, 20% or whatever, 25,
Yeah.
but it came all the way back, gapped up on earnings, so it could pull back. But I mean, to me, the uptrend is there. So, I haven't seen signs of any sort of major top yet.
A little bit of the land grab phase, maybe.
Yeah, well, sure. I mean, it's rare merchandise. I don't want
Yeah.
to talk too much about that one stock because
Sure,
honestly,
of course.
a month from now, I could be like, oh, this thing, I'm out, but or sooner if something really bad happened. But overall, it's in gear, it's a leader, it's buying, the numbers are there, it's rare merchandise fundamentally, and clearly the big investors are buying it.
Are you expecting or maybe more have your guard up for, the 8 to 10% or more market pullback that we haven't gotten since at least, not in the NASDAQ, we got one last July, August, but S&P, it's been a while since an actual 10% correction. Are you to what degree, I guess, do you have sort of your guard up for that right now?
Well, in general, as you were there for the webinar, I do think the odds favor this year being like positive but choppier. Like I'd love to be wrong, and it's just another 2024. I'm all in for that, and if that happens, I'll be there for it. But so I do think, not that I'm on the lookout for it, but I think it's more, it's more possible that we're going to see a few more of these tedious sort of periods of time. But to answer your question right now, it's like, yeah, until we get going with the indexes, if we eventually the support will fail. If you keep testing support, sentiment has come down, which is good. And there is some bad news out there, which I like, or some worrisome news. I'm not anticipating it, but that's one reason I'm still holding a good chunk of cash is because, maybe we come back, maybe there's another gap down this coming Monday, and this time support doesn't hold. It just keeps going down. So, until we kind of get more in gear, I would say the chances are not elevated, but higher than they would be normally, like if we were just in a solid uptrend.
Yeah. Last question. Eagles, Chiefs, or
Eagles.
don't care?
Yeah. Oh, well, I mean, definitely rooting for the Eagles. I can't do the Chiefs anymore.
No.
But I feel like I'm pretty good at the market. Terrible sports better. Terrible. But I do have a feeling, and I kind of hope I'm wrong, because it's been quite a few Super Bowls where it's been very close. Obviously,
Sure.
last year's overtime. And part of me is wondering if it's time for not a blowout, but something where one team will win by, say, 14 or more. So that's
What is the line? It's close.
Oh,
Chiefs.
it's 1.5. Yeah, yeah. So I mean, if you were betting one team won by 10 or whatever, I mean, that would be pretty outside the norm odds, you know what I mean? So
Yeah.
I do wonder if, not because the team is much better, but just, somebody fumbles the snap, somebody gets sacked and fumbles, that sort of thing.
Yeah.
I have a feeling the Chiefs will probably stop Barkley, and then
Yeah.
I don't know if Hurts can score 30.
Hard
Just
to bet against them at this point. I've learned the hard
Yeah.
way as a Bills fan.
No.
No, it's just betting with my heart, not money, thankfully.
Right.
But my heart's more expendable. Mike, thanks for joining us, and we'll have you on again soon. Hopefully, when the market is at a little higher highs than they are now.
I'm ready. Thanks, guys.
All right, take care. All right, now we welcome on Tyler London, Chief Analyst of Cabot Small Cap Confidential, Cabot Early Opportunities. Tyler, small caps have, we've had you on a bunch of times here. They've, been a little bit like, Lucy pulling the football every time you think Charlie Brown's going to connect. But seems like they're making some actual progress. They're not soaring, but it seems like they're having a little bit of a moment now. How does this feel any different than some of the other mini rallies over the past year or 2 years to you?
Still feel a little bit like Charlie Brown, I'd say. Given, like, I put up a post last Friday. I'm looking at it over here on a different screen. So small caps were up 3.7% year to date versus 4% for large caps. And I just pulled that data again a couple of minutes ago, and we're now up 1.9% year to date versus 2.9% for large caps. So I think that the difference this year, Chris, is that the pullbacks have been less dramatic. So they're kind of there, right? Like waiting for their moment to shine, I guess. So I think there's a whole bunch of things going on in the market that are conducive for small cap performance still. But yeah, we can every time we every time I say that and it doesn't happen, just extends the streak of not having them do what I think they're going to do,
Yeah, you need to just give up, and then they'll
and
really
then they'll
take.
go.
Yeah,
Yeah, yeah, yeah.
One thing
But
that,
it's always the index level, right? Like I think we've talked about this
yeah,
before that in the advisory services, we're not buying the small cap ETFs. We're buying and recommending individual stocks. So the good thing is that the environment for finding good stories, attractive performing small caps, good charts, all that kind of stuff, I think is pretty good right now.
yeah,
right.
that mirrors something that Jacob was talking about, where he's like, "Hey, I'm excited when the market's doing this. I'm excited because it's really a stock picker's market." Are you seeing similar things in small cap land? I mean, even if it's just like sector specific, where you've got these pockets of strength or these opportunities that, if you were to just look at the overall index level, that it wouldn't be apparent.
I would say we're in one of those periods where it feels like super random. Like a lot of the stocks that I'm looking at, that the charts look good and the stories are interesting, they're just kind of like all over the place. It is very, very stock specific. If I would repeat what Jacob said there. And then, we're not into earnings season really for small caps yet. So we still have that to ramp up in the next 2 or 3 weeks. And that's going to shape a lot of opinions on small caps, of course, at least in the short term. But yeah, I think that the takeaway for listeners is that it's kind of a random set. It's not like biotech small caps or med tech or tech small caps. It's like a little bit here and a little bit there. So it really is stock specific.
Yeah. Could you attribute some of the lag to just the fact that a lot of small caps haven't reported yet? We've seen large caps, some prominent large caps get earnings bumps so far this season. Is it possible that, once small caps have, completed this season of reporting, they may get the bump that you've been looking for from, lower interest rate? I mean, obviously the Fed has paused things for now, but get sort of the bump that you've been anticipating in a lower interest rate environment.
Yeah, I think one of the good things that's happening, there's so much noise out there with Trump and like the White House and everything. But if you kind of can put all that aside and listen to like what Treasury Secretary Bessent is saying, they're really focused on trying to bring the 10-year yield down. And
Hmm.
we have a jump in the 10-year today. And I think that's one of the big reasons why the market isn't as strong as it's been. But um, I think that bringing the 10-year yield down will help small caps. I think it'll help the market in general, but it'll help small caps maybe break out more if and when that 10-year can, fall below 4.5, 4.3, somewhere in there. Um, we are seeing small caps that where there's like some kind of read through to a large cap earnings story. Like for instance, we had Uber report a couple of days ago, and then Uber was in the news this morning. That stock is up nicely. And they are a majority shareholder in a little company called Serve Robotics, ticker symbol is SERV. No news specific to Serve this morning, but that stock is up. So there's a read through coming from that large cap. So that's kind of more of what I'm seeing right now is when you see a small cap that's making a move and there's no news, is going out and trying to see what is happening in a company that it's related to, or in a space or a market, and see what the read through is.
Is that are you is your thought that that's people looking for maybe the next narrative? I mean, we've been able to lean on the AI chip data center, all that stuff for 2 years. Is it maybe a little bit of an exploratory play, or is it an expectation that the value is going to justify it? If
I
you know
think
what I
it's
mean.
just an expectation that because, you know, larger company has something going for it that's helping that share price, that there's going to be a read through to
Yeah.
XYZ smaller company when that company eventually reports.
We,
I think people
we
are just trying to game things a little bit.
No.
We asked you this question last year. It might have been halfway through last year. How many rate cuts do you anticipate from the Fed? I think last year you might have been a year ahead of your time. You said no rate cuts. You
Yeah. Run it
still
back.
owe us some hot sauce for that. What's your expectation? So now this year it seems like two is It's the number on their dot plot for the year. What's your expectation?
Yeah, I think one or two seems pretty
Yeah.
reasonable. But again, like everybody else, you sort of just wait and see. It's all about, is inflation going to continue to come down? Is it going to get stuck? It's going to be really interesting to see what happens with the jobs numbers in 2 to 3 months with everything that's going on in the government.
Yes.
Like I was kind of going over the numbers this morning, and I won't bore everybody with it, but um, the jobs numbers, it seems like there's going to be a lot of noise in those numbers coming up. Um, so it'll be interesting to see how if and how that affects interest rate policy.
Yeah, I mean, then the tariff overhang, and how quickly it's been changing already in the last couple of weeks. There are tariffs on Mexico and Canada, and there weren't, and China. It seems like we're back into a more volatile period than we were. As recently, I mean, maybe it's just a Trump presidency thing. Maybe it's not, but I mean, the results under Trump the first time around were quite good. It's like Trump is the wall of worry right now, or tariffs are. But how much of an impact do you think, you know, if tariffs do, rear their ugly head again with Mexico, Canada, or wherever, how much do you think that'll play a role in where the market goes?
In the broad market, I think,
Yeah.
yeah, I think that, I mean, we saw that worry, right? Like when those tariffs were announced, the market was rather weak that morning, right? And then it kind of got rolled back or pulled back
Yeah.
a little bit, and things kind of settled out. I think that it's going to be really stock and company specific. I think one of the interesting like backstories is that we got to wonder how much of this is giving companies the heads up that if you are oversourcing from China, that you should, reboot your supply chain and start sourcing elsewhere. There's a company like Shark Ninja has been, yeah, it's a consumer goods company and makes small appliances. They've been redoing their supply chain for a while and sourcing a lot less stuff from China. And then listen to Peloton's earnings call this week,
Yeah.
and very very small impact there um, from tariffs in Canada, Mexico, and China. So I think that it does get to be very stock specific. And I mean, if companies aren't evaluating their supply chains at this point and maybe switching them up a little bit, then it's like you kind of had the choice to, you kind of had the time to do that.
Yeah, are
Is
small caps more immune because, a lot of them do most of their business in America? Is that an advantage they have in sort of the tariff era?
Yeah, I think it's interesting. I don't know the honest answer to that is I don't know how much exactly is sourced. But if we think about like the small cap index, there's a lot of energy exposure, healthcare exposure,
Yeah.
um, those kinds of materials and stuff. So I mean, I think compared to the large cap index, there's a lot less sourcing from China. But it's the small cap play is definitely like strong U.S. economy, strong U.S. market. That's like pretty bread and butter standard. If the U.S. economy is going to do well and grow, small caps should perform well because they have more domestic exposure.
Yeah.
have the tariff or has the tariff overhang become enough of a concern that you're using it, I guess, as a filter when you're looking for small caps? Like, if you're looking at some names that might otherwise be promising, if they've got like a lot of supply chain reliance on Mexico, Canada, China, is that enough to maybe put it lower on your watch list or keep it off the watch list entirely?
Yeah, for sure. Not keep it off the watch list entirely, but like we just had a small cap confidential issue published yesterday, and it certainly factored into my thinking. I had two or three stocks that were in the final cut, and the one that I went with had very little exposure just for that reason.
Interesting. Last question. Eagles, Chiefs, don't care.
Oh, don't care. Yeah, I was
That's
rooting for the Bills.
yeah. I'm yeah, definitely. As a Bills fan, I'm definitely in that same boat. Okay. I'm glad we've had three different answers from three different guests. So I'm glad we have variety.
Yeah,
Jacob, as you would expect, is a Chiefs fan, or is rooting for the Chiefs because his daughter is a big Taylor Swift fan, and Jacob secretly is too.
Because Ham, he's a
I think, yeah, you're right. Jacob is the actual T Swift fan.
Jacob
Um,
Jacob just wants to go with whichever team he thinks is going to win. Let's be
that's
honest,
true.
right?
Yeah, front runner. Thanks for joining us, Tyler, and I look forward to the day we touch base and Charlie Brown is connected with the football, so to speak, for small caps. I
As
think
do
it'll
I.
be.
Before we let you go, Chris, I believe we have a
Oh yes,
promo.
sorry. So as I mentioned, Tyler runs our Small Cap Confidential advisory, and we have a deal for people today for listeners to today's podcast. If you go to cabotwealth.com/street, we're offering Small Cap Confidential for 65% off the normal price. It's $697 for the year. And it's a 30-day, 100% money back guarantee. So you could try the service out for 30 days. And, if it's just not for you, you get your money back. But I think you'll probably like it. Tyler has had very good returns, has outperformed small cap indexes. And when times are good for small caps, the returns are quite good. So again, 65% off the normal price if you go to cabotwealth.com/street. Hopefully that covers it. Thanks, Tyler. Appreciate you joining us.
All right. Thanks, guys. Good to see you. Enjoy the game on Sunday.
All right, you too. And our final guest today is Cliff Droke, who's chief analyst of the Cabot Turnaround Letter. Cliff, welcome. And you wrote about this morning, actually. This is a really interesting angle on the current market and climate that I hadn't read from any of our other analysts or anywhere at all. Is that one thing you're looking at is bank credit standards. It seems that the standards are tightening for personal and commercial loans, and that often presages a negative shift in the demand for stocks, while loosening standards frees up money that finds its way into the financial market, often pushing stocks higher. So that's something, A, that you're seeing now, and does it have you concerned about a potential pullback?
Not so much in the near term, and by near term I mean 3 to 5 months out.
Yeah.
It's there. The standards are tightening a little bit, but not significantly enough. They're still more loose than tight. But It's coming from basically a neutral level, so it's got a while before it would get to what we would call tight. It's also getting looser, a little better and it's expected to loosen up as the year progresses for auto loans and certain aspects of commercial real estate. And also small business loans are still fairly loose. So it's sort of a mixed bag, but it doesn't have me concerned right now for the stock market.
Okay, that's good to know. But that's an interesting angle, though. If people are looking for tells on, if the market's going to pull back, that's a good one. I know you've been high on gold and silver. Metals are your background, and we've had you on several times, and I feel like every time we have you on, gold is higher, gold prices, silver prices are higher, and you're like, no, I'm still high on it, and you're right. They keep rising. I assume you're still high on gold and silver, despite both being at all-time highs price wise.
Yeah, normally the cyclicality of gold and silver would keep me from doing that, but these are not normal times. There's just inflation is so relentless, especially in the U.S. And I think people are just nervous about all that's going on, especially now that with the tariffs coming up onto the front burner, and inflation is not abating, certainly not on the retail consumer level, and people are just buying gold physically and in terms of gold futures, ETFs, et cetera. It's a relentless safe haven right now. And I think it's silver, I think, is starting to catch up to gold finally. It's been lagging in the recent months, but I'm still high on the precious metals, generally speaking.
Are there any other areas of the market that are really drawing your attention right now? Anything that, we've talked to Mike, we've talked to Jacob today, and the consensus seems to be we're seeing, choppiness, but a lot of resiliency in the market. Are there any sectors that you're looking at? Obviously, with turnarounds being a specialty of yours, anything that looks like it's really primed for opportunity?
Well, there's a couple of things. One is chemicals. I keep in my daily forays in trying to find good turnaround stocks and sectors. Keep seeing chemical stocks. To me, they just stand out. They look attractive. They're not on fire, and mm, they're not screaming buys yet. But I feel like we're getting close to a buy for a potentially major turnaround. Maybe probably heating up as the year progresses. Maybe more so in the second half of the year. Just generally chemical stocks, and in particular, I think fertilizer stocks are going to do well. That's kind of a gutsy prediction because fertilizer stocks tend to be in the doldrums a lot. But what I'm seeing is potential for a rebound, and I understand this is not a commodity focused podcast, and the turnaround letter is not commodities focused per se. But I'm seeing a lot of strength in ag commodities, corn, wheat, soybeans, and I have to think that the fertilizer stocks and maybe even eventually the farm equipment stocks will turn around at some point later, as the year progresses. So those are two areas I'm really watching closely.
We've
The
been
farm
talking about with some of the analysts we had on before that it's been encouraging that while the indexes themselves aren't necessarily much higher in the last few weeks, market breadth has expanded, and I assume that makes for a more friendly environment as a turnaround investor, like yourself.
It does. I look at breadth as something of a liquidity indicator. We were talking about bank credit, which is also a very major liquidity indicator. The more liquid the market, of course, the better it is for turnarounds. And speaking of breadth, I look at like a lot of investors, the NYSE advanced decline line, which is a breadth indicator, but I think it's actually as much a liquidity indicator as anything. So when the NYSE advanced decline line is trending higher, it's good for turnarounds. It's good for the stock market generally. It means there's money is plentiful in the market, and that's always consideration number one. As far as other breadth indicators, the one area that has me slightly concerned, not majorly, is the NASDAQ. I look at the new 52-week lows on the NASDAQ, and they've been a little higher than I like to see them, even more so than in the last couple of years, where they've been higher than normal just for like 2 years running. And so I'm watching the tech sector closely, but overall, breadth seems to be supportive certainly of the near term outlook.
I wanted to ask one other question, just going back to ag equipment. Given the threats of deportation, which is probably going to disproportionately hit farm workers if those, if everything goes sort of through as expected. Any farm automation names, or is it premature to look at like farm automation as maybe something that's a viable investing theme?
Not at all. I don't know that it qualifies. I'm going to mention this stock. I don't know if it qualifies as a turnaround. Probably does not. I think it's actually fairly well formed. It's got a lot of momentum behind it at this point. Is Deere? I think it's symbol DE. They have just launched a major series of automated tractors and equipment that farmers can, that can. You don't necessarily have to buy the entire tractor. You could attach this equipment; it will automate it. But they're coming up. Deere is ahead of the curve when it comes to automated tractors, and in fact, they're pushing that angle to some extent. They're saying, the farm worker shortage is going to push AI, of course, and automation and farming. And so Deere, I would say, is number one, probably the number one stock to look at. And I believe. Oh, go ahead.
Oh, I was just gonna say, I really like that as a thematic play. There's the Venn diagram of like beneficial tailwinds is really strong in a name like that. I think I'm gonna have to look at Deere more closely.
Yeah, and I think even Mike Santolo talked about Deere not long ago, and as a momentum play, it's a good looking stock. I wish I could put it as a turnaround, but I think it's advanced beyond that stage.
What is your expectation for the market? Like we've had people, we've had some of these analyst roundtables where everyone is super bullish. A lot of times that's happened, just the timing, that's where it's been. This this time it seems there's a healthy balance between people who are encouraged by the last couple weeks, with the Fed didn't do anything to piss people off, and weathering the DeepSeek news and weathering of all the tariff back and forth. So it seems we had Mike, Jacob, and Tyler all on, and they're sort of in a nice sweet spot where they're not overly bullish, but they're also encouraged. Where are you with the market right now?
I'm in harmony with them. I'm not overly bullish. I'm not bearish, but
Right.
I've got healthy skepticism. I get a little nervous on some days because going into this year, I don't like to make year ahead forecasts because they can be notoriously wrong. But my year ahead assessment was that this was going to be an above normal volatility year, compared to the last 2 years at least. And I just keep waiting for volatility to rear its ugly head. And every time it does a little bit, it backs off. So I'm cautiously bullish.
Okay. That's a good place to be. Yeah, I think the last couple of these when we've had everyone on and everyone was super bullish, the market sort of
Just
came
steers into a 5% correction immediately.
right. Yeah. So this makes me more bullish. Just talking to the four of you on this episode has made me more bullish. I feel like we're in a sort of a sweet spot. So I'm glad to hear that.
I hope so.
Yeah. One last question. Eagles, Chiefs, don't care.
I'm not an NFL fan at all, but I'll go ahead. It's going to be the Chiefs, right? I mean, aren't
I
they?
think that's probably in terms of if you don't have a rooting interest, I think that's the smart play. Yeah. And as I've said on several times, as a Bills fan, I know it all too well. Cliff, thanks for joining us. And thanks everyone for joining Street Check this week. We'll be back next week with another episode, and hopefully that the market will keep sort of churning higher. We'll see you next week.